Hey everyone, Nick with Nick Crothers Real Estate, brokered by Open Real Estate, locally owned and serving Denver, Metro, and Boulder. I'm coming to you today with a real estate real talk video. This is a new series I'm going to be doing to kind of cut through some of the fuzz in the media. I think this is on a lot of homeowners' minds with the way home values have leveled off this year, particularly with some pretty large appreciation numbers in the COVID years and the way that it's all been reported in the national media. So let me ask you, do headlines about today's home prices have you concerned about the value of your home? It's true, home prices have dipped nationally from their peak last June. However, context is key. Let's look at the bigger picture. Here coming up is a graph of how home prices have changed since the start of the pandemic. Let's start with the red bar on the right. It shows that nationally, home values have dropped 2.8% since last June. That's true for our area here in the Front Range as well. But take a look at the blue bar on the left. It shows how much home values increased for over the 2 years prior. Our appreciation here in Denver, Metro, and Boulder was about 34%. It really puts the recent change in perspective. It maybe makes people particularly nervous that things have switched. But the fact of the matter is, depending on your timing, you haven't lost nearly as much as you've gained. Here in Denver and Boulder, again, we appreciated 34% during that time, which is a little less frothy than the national market. But even that felt like a bubble to some. I'll debate it till I'm blue in the face that home prices are all a function of supply and demand. And we have a scarcity issue in this country and in the Front Range. The current slowness of the market is a temporary pause due to high interest rates simply making monthly numbers unaffordable for a lot of people. And I do have tactics to help home buyers deal with that issue, but I'm not going to get into it here. I'm a firm believer that as soon as we get some relief on rates, that we'll be seeing strong appreciation again because we simply don't have enough homes being built. Also know that the equity market indexes have performed similarly during both those periods, give or take. So if you took an amount for your down payment from a common stock index like the Dow, S&P 500, NASDAQ, that money has performed similarly in your home as it would have in those indexes. If you use leverage, you might be up or down depending on the timing of those transactions. But the fact is that the money really performs similarly. It might be less liquid, but it also provided you with a place that you own, a place that maybe you don't pay rent on, and a vehicle where you're paying down in principal every month. I believe that short-term horizon is the biggest risk in purchasing real estate, and it's also true for a lot of other investments. I don't recommend buying if your time horizon is 2 years or less, for a couple reasons that, again, we just don't have time for here. Over any kind of length of time, the Denver and Boulder market have historically appreciated 6 to 6.5%. And if you're leveraged, i.e. you got a loan, the dollar-on-dollar return is much greater than that while achieving shelter for you and perhaps your family with tax advantages to boot. But I digress. The point here is to present real numbers and real comparisons, so don't let the latest headlines fool you about national home prices. Yes, they are down, but only slightly, and appreciation will come back strong once we get interest rate relief. If you have any questions about your home value or anything else I touched on here, let's talk. Thanks for listening to my video today. Until next time, I'm Nick.